ladies and gentlemen. I'm Hirol Datia. We have with us Mr. K.N. Dey, Managing Partner at United Financial Consultants, joining in. Mr. Dey actually brings with himself a rich experience of heading the Mumbai Operations Financial Risk Management Division under the Global Risk Management Solutions practice of PricewaterhouseCoopers in Mumbai. He has accomplished almost over 100 projects on market risk management, including conducting risk audits for banks, as well as bank treasuries. In fact, he has also delivered a lot of training programs on market risk management under Basel II Accord in Dubai, Riyadh, as well as Muscat. Started with his career with Canara Bank, worked for 14 years in the Foreign Exchange and International Division. He's also been the director of Basics Forex over a decade. Of late, he was the executive director of McCly Financial from September 2013 to December 2016. So the list actually goes on, and it's great to have Mr. Dey, with us to actually give us, insights on what we should be looking at. He has also, assisted CAG in derivatives on a case-to-case basis. Welcome to the show, Mr. Dey, and a pleasure to speak to you as always.
Good afternoon.
Mr. Dey, my first question coming to you is overall, if you see in terms of where the market goes from a currency perspective, a lot of factors that could have been impacted. We did see the rupee hit a record low in the recent past, and it's a psychological mark of 80 to the dollar in early trade on Tuesday last week. Now, clearly, with that, if you go to see a 2.7% fall is what we've seen in the last 1 month, whereas it's got weaker by almost 7.5% in the last 1 year. What are the factors that you would attribute to this, first of all?
Hi, it's all over the story of rupee for the last couple of months. In fact, it started falling from February, as you rightly said. Last month it fell about 2.7. In fact, it fell about 7% from Feb 24 since the Russian and the Ukraine crisis started. Month of June, especially when the war was almost silent, not any news coming out so much, and the rupee fell by almost 2%. More than 2%. That was on account of the outflow in the equity market, which I believe was about 50,000 crore, which is roughly around $6.5 to $7 billion, which is quite huge in one calendar month. That could be one of the reasons. And the other reason is that whenever the rupee starts falling, we see the flow starts little drying up. Whether it is capital market like FIIs, they bring the money little late. Whether it is NRIs, they bring the money little late because they hope if the rupee falls by another 1 rupee, we will get more. So the capital market slightly gets dried out. So last July, we saw quite a big fall, 80.06, I think lifetime low. And since then, RBI has been maintaining it in and around 80. Today is around 79.83 to 85. So I guess if RBI is able to maintain this between 79.80 to 80.05, for another couple of days, maybe this week, we can expect a small correction coming in. As you said, the first thing, why this fall is because demand is more than the supply. Supply is not there. There is an outflow. Fortunately, the FIs have been buying in the last week of July. Sorry, in the last week, in the previous week. So we didn't see so much of pressure. But Reserve Bank of India has been doing very well to see that volatility is being avoided. And if you can maintain a static level, maybe 15-20 paisa band, slowly we will start getting flows from capital like FIIs, NRIs. And then I think we could see some correction going into.
Right. So with all of this said and done, as you mentioned right now, to what extent do you think that the RBI will actually intervene?
Has been intervening from last 5 months, and almost every day through National Bank. I think that's a well protected, where they act as a speed breaker for the rupee. They don't allow the rupee to fall freely. But and as we have been hearing, that RBI has almost intervened close to 35 to $40 billion, hopefully, in the last 6-7 months. But that's a good, and we have a huge reserve too. And But at the same time of intervention, also, I believe if certain new measures come in, like we saw similar fall sometimes in 2013, uh, June, July levels, when the rupee fell from, I guess, 58, 59 to 68, 69 levels. We saw a similar fall coming in 2008 when the Lehman crisis,
Mm.
when the rupee went from 42 to 52 and then it corrected back to 47. Uh, in the 2013, the last fall, this big fall, where as soon as the new governor came in, they implemented that FCNR swap for three years, and I think we got in about $27 billion, which protected the rupee. Inflow started coming in. The rupee corrected from 69 to I think 62, 63 in a matter of 15, 20 days. So that sort of confidence has to be created. Maybe uh, RBI may come with some sort of FCNR now. Of course, the threat is not so much there, but still to control the rupee to I will be happy if I see the rupee between 78.50 to 79.50. Maybe RBI could come in with some sort of FCNR thing in the coming weeks. Or the best option I feel is is for the rupee to fall is purely our trade deficit going up. I think today it's around $26 billion a month, and we cannot pressurize the exporters to increase their export overnight, or it's difficult for them to increase exports. So other thing we can do is that we can bring our imports down, which can happen. So if government and RBI in consultation can bring in temporarily certain restriction on non-essential imports, especially gold or other electronics, temporarily, that could bring the trade deficit down immediately from 26. If we can bring a trade deficit to say 15 or $16 billion, that will immediately give a protection to the rupee. It's a temporary thing we need to act. If those things come together, I feel we are very well managed in this cycle of this rupee fall.
Okay. And overall, if you see in terms of if you have to value the Indian rupee to the other emerging market currencies, where would you place us?
I think we are very well placed today. We cannot compare our currency
Mm.
with currencies which are fully float like any other currencies. Today, I think someone said we cannot say that just because euro has come down or sterling has come down. We can't. Our currency is a controlled currency. We are not fully convertible in a capital account. But at the same time, we have
Mm.
to monitor it such a way that it's not necessary that if it goes to 82, our exports will grow up. Obviously, the buyers there also are very smart guys. So if we can keep the rupee, which I think RBI has done greatly well, to keep in a band of maybe 1 or 2 rupees, which could be, we say it's market determined, but actually to some extent it is a determined between market and the central bank put together. To keep a steady 1 rupee, 1.5 rupee gap from both the sides, I think that would be a steady for next couple of, at least by the end of this year. And with oil prices, like one of the major imports we have, if that's ranging around 100 to 110 was the last RBI support level. RBI had announced they have marking around 110, and it's
Mm.
now around 103. So his Brent is under control. We have the monsoon perfectly well, and if the dollar index also, which had touched 109 a few days back, is now below 107, if that also
Yeah.
trades in and around the same level, I don't see why the rupee should not correct from here a little bit, maybe towards 79.50 to 30, 79.30 levels.
Right. So with this, is that 79.30 to 79.50 kind of a band is where you see taking all the factors into consideration that you mentioned?
And not a particular level, what
Hmm.
is the direction I would feel. I
Correct.
think the worst is over. I think the worst is over for this particular cycle. Maybe one more day could say 89, 25, 30. Those are ups and downs. But I think coming from 73.50 levels to this 80, the round figure of 80 has reached. I feel
Mm.
the worst is over, and we could see a correction in the rupee. It could be level between any, whether you take 79.50, 78.80, but it will slowly move to level when we see the flows coming in from the capital flows. That maybe it should settle around some in the range of 78.80 to 73, so 79.50. These levels are not. It is the direction which I mean to say.
Hmm,
That level.
hmm, hmm. Right. And overall, what is the impact are we expecting, especially in terms of the US Fed rate hike as well as the FI outflows that are happening?
US has hiked the rate this time around 1.75% this year already, and 2 days from now, market anticipates another 75 basis points. So they'll come to 2.5% in a year, which is the highest ever they have done in any year in 3 or 4 rate hikes. So obviously there is an outflow from the Indian bond market to the US bond markets, and but there is a limitation to where they can also hike the rates. I believe in the coming RBI meeting on 5th, we could see a 25 basis point rate hike coming in also. So if we are able to maintain that difference, we could see the outflows bond market, which was happening when the 10-year yield was trading around 7.4546. It is showing partly correction back towards 7.40
Mm.
10-year yield. So I don't see much of money going up in the bond market now. And might be these are the levels. Though RBI, sorry, FOMC's 75 basis point is being already discounted. So I see the money now coming into India. And once RBI does a little hike of, say, maybe 25 basis point on 5th of August, that will give a slight boost to the capital to come in more.
Hmm, hmm. Right. And overall, the recent RBI move, Mr. Day, that allowed the banks and traders to invoice and settle global transaction in rupee. How big a step is this one to make rupee more international? And two, do you think that could provide any respite in the short term?
Uh, the f- the first question, your last question is respect in the short term. I don't think so because
Hmm.
rupee to trade internationally will take its time. It may take a couple of years, but it's a right step towards now. See, this is easy for a country has a trade surplus. We have a trade
Hmm.
deficit. We have to pay dollars more than we receive the dollars on exports. So today, even if we export to, say, Western countries, I have a doubt whether they would like to invoice in rupees. Now, rupee trading can be feasible in Russia because now they want to export oil to India. I have severe doubts whether China will accept our import payments in rupees. They would like to be in yuan. So this is a right step, but I guess it will take its time because once we start building a better export zone and a little minimize our imports,
Hmm.
that's time when we see this thing would come out. I think it was there in the past also where we had that Asian Clearing Union, I think a decade back, where neighboring countries were trading in Indian rupees. And we had sometime about a few 7, 8 years back, we had a Russian rupee account with India. But I guess this is a right step, but nothing for the short term. For the long term, this could be helpful to us.
Right. And overall, if you see in terms of where uh, the import side of it goes, as you mentioned, that one, yes, the government and the RBI should look at a cohesive approach in terms of, putting out some restrictions in terms of non-essential imports. However, when you talk about the essential import side of it, and because we will be making payments in the US dollar, at least for the time being, do you think that's something which could impact the balance of payment as well and in turn still have a counter effect?
Well, a balance of payment is whatever deficit is there is being filled up by the capital that is there. And fortunately, we have a good NRI flows coming in
Hmm.
always couple of years. We have also good capital flows coming in. Of course, because of this war, there is some commas and but it is not a full stop. We'll see once certain confidence is being created, we'll again see capital coming in. I don't see much on the on threat on the capital flows coming in. What we need right away today is to minimize our imports. That is the most important.
Hmm.
If we don't minimize our imports, which can happen, as I said, very if we don't import gold for 3 months, fine, the prices may go up, but that at least will help the trade deficit to narrow down slightly.
Mm, mm,
At this moment, what I need urgently is a narrowing of the trade deficit. I cannot push my exports up. It is not possible. When we see certain sort of recessions coming in the Western countries, how can I expand my exports overnight? But
mm,
yes, I can reduce my imports overnight. We cannot reduce the cost of the fuel, import of the fuel or the palmolene or other essential food products and all, or medicine. But we can restrict on certain non-essential imports, at least for maybe to 3 to 4 months. That could give some time for RBI, because when the deficit is lower, your outflow is also lower. That can cushion for next 3 4 months to settle properly, to see how capital flows coming. And also, as the government has said, yeah, I think few years back, the Make in India program, really it's one of the best program if it really gets implemented properly, because Make in India will definitely substitute our imports. That's the goal for that. So if that thing starts working pretty well, then obviously one day we will be a trade surplus country, for which I will be most happy to see as soon as possible.
Right. And overall, from the points that we discussed, Mr. Day, anything that we've missed that you think should be of key focus area from an investor perspective in the currency market?
Uh, our main job is to advise corporates how to manage their FX risk, especially because the markets are very volatile. The interest rates are very volatile nowadays.
Mm.
So, from investor point of view, I think the FIs who come to India, they don't look to 3, 4, 5, 6% return. They normally look at a higher set of return, maybe 10, 15, 20%. For them, equity market or the bond markets are very good. Uh, I don't see investors not coming in. There was a gap, but once I think as I said, we are on the fag end of this cycle. Maybe we could see very shortly investors coming in. There's also the other things, the negatives are over. As I said, dollar index has settled, Brent has settled, monsoon has come in. All the three positives are there. There are some small negatives. If we can plug them through,
Mm.
definitely we will see investors coming into back to India.
Right. So I think a lot's happening around, and I think there are good ways to, emerge out of it in a positive way as well, provided all the actions, as you mentioned, are taken in the correct step, right?
Yeah, absolutely.
Absolutely. So there are ways to actually de-risk ourselves as well as an economy. Thank you, Mr. Day, for giving us this, because everyone usually talks about what the problems could be, but not everyone really talks about as what the solution could be to get out of this problem. And that's what is absolutely important. But thank you so much for sharing your thoughts with us.
Absolutely.
A pleasure to speak to you. Thank you. Stay safe and speak to you soon again.
Wish you the same. Thank you.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.